I'm Michelle Makori, and this is Kitco News coming to you from Tampa, Florida, from the headquarters of the Verified Investing team. And I am joined by the newest member of the Verified team, Dr. Justin Burkholder, aka Dr. B. Great to be here with you.
Hey, thanks for having me. Yeah, great to have you here in Tampa.
Emergency doctor turned trader extraordinaire. We definitely want to get into your very interesting background. Also want to get your thoughts on the general health of the U.S. economy, your outlook for the markets, and of course, dig deep into your very specific trading techniques. But let's start off with your fascinating background, because how did you go from a doctor, a physician in the ER, reading x-rays and stopping patients from dying, to reading charts and making life-changing trades?
Yeah, no, so it's quite a story. I was an ER doc in Fort Myers. I actually am from Philadelphia, went to medical school there, trained in Miami Beach in residency at Mount Sinai Medical Center, and then took a position in a partnership group in the Fort Myers area. I practiced there as an attending emergency physician for about 5 years. And about a year or two into my practice, I actually started to have some hip pain. And I was diagnosed with a hip condition, and I looked back and I said, wow, that's probably from all of my sports. I was a big high school and collegiate athlete, and I had 2 hip surgeries, and I came back and I was on crutches walking around the ER a couple months after my surgeries, and I realized that it's quite a bit of walking, in the ER. And so my orthopedist recommended, look, you probably need to take a desk job. And I actually was also a finance major in college, in addition to pre-med. And I decided that I would eventually transition into finance. So I found Gareth on YouTube. I started to look at the charts and learn technical analysis. And I was really fascinated, by the price movement and how different trend lines can affect, major moves, not only on the macro scale, but also on the micro scale. And I came in and trained with the team here, and they had a position for me, and so it's been a lot of fun.
So you found Gareth. Gareth online, and that was enough for you to give up a lifelong career as a medical doctor to try trading?
Well, I knew that I couldn't practice in the ER anymore. I just knew that
because you have to be on your feet for that a lot.
Right, 10 or 15,000 steps per shift, and after 2 major surgeries, it was difficult. So my physician said, find a desk job, and I said, okay, well, I can do telehealth or I can do something else. And as an ER doc, telehealth just didn't appeal to me. And so I looked at a couple other things. I was previously working for a global healthcare company, and I considered, going back and working with them. But I said, I want to change things up. I want to do something different, maybe go back and learn about finance more and look at the financial markets. And right around 2020, 2021 is when I had my surgeries, and I saw the amazing run in the stock market, and that's really when I got interested. So in between my ER shifts, I would study the markets, I would study the charts.
Using Gareth's course? Well,
this was actually a couple years before I found Gareth. And I went online and I looked at a bunch of different people and supposed gurus, and I found Gareth, and I said, wow, he's really incredible. And thankfully they've been so welcoming and took me in here at Verified Investing.
You say you found Gareth like you found God, like you found Jesus.
Well, he has become a good friend of mine, so it's.
But still, okay, divine inspiration aside, it's still such a dramatic move. I mean, surely there was a trade that you did that confirmed to you, I can do this. I mean, was there any sort of pivotal moment where you used this newfound knowledge, had a really successful trade, or 2, or 10, or whatever it is that gives you enough conviction to make this big decision to have such a dramatic career transition?
Right. Yeah. So there was a great couple trades actually about a year ago in March of 2023 during the banking crisis. And, I remember the saying, you can make money when blood is running in the streets. And I saw these banking stocks collapsing, and I had already had the technical analysis foundation. And so most people would be scared about a falling, stock, but I actually found an opportunity to profit, in those situations. And so I can actually pull up a chart for
talk
you
us
here.
through it. Yeah.
This was First Republic Bank, and many of you remember this crazy time in the markets. First Republic Bank was trading somewhere around $121 here in early March 23, and there was a major fall here. And I actually zoomed in. I zoomed into the lower time frames, and I started to see these moves on the 1-minute charts. And I came up with a couple patterns here, and we can talk about this in more detail later. But, for example, the stock fell precipitously here. I found my patterns, and this was a 5% move here. So, for example, I would enter here and then sell here close to resistance. Same type of pattern here. This was an 11% move. And this all happened within 20, 30 minutes. So I did that for about 3 or 4 days. And by the end of that time frame, essentially by the end of the week, I was up $30,000, for the first time in my life. And for years, I didn't understand how this worked, and I really wanted to learn it. And years before this, you struggle when you start to learn trading and investing, and until you actually study and figure out some of the details, that's when it really clicked for me, and I said, wow, I really can do this. So
you made $30,000 in what, 5 days?
About 4 days.
4 days, using these short-term trades, the 1-minute chart, which I know is the focus of your course.
Right.
And we'll break down exactly how that works. And of course, you get into tremendous detail, but you make a number of small micro trades that add up.
Right. And these weren't big positions. These were $10,000 to $15,000 positions. They weren't $100,000, $200,000 positions. So it was pretty unique, yeah.
And that was enough to give you the confidence to say, all of those years of medical school, all of that time and experience working as a doctor and as an ER doctor, I'm going to pack it away for the excitement and the adrenaline rush of the trading floor.
It was tough.
Trading desk, rather.
Sure. No, it was tough. I went through, again, 4 years of medical school, 4 years of residency, and obviously 4 years of college before all of that. And I was in a great group, loved my colleagues, loved my work, really, really incredible work that we do in the ER. But I realized that, every shift I was in pain. And so I really had to kind of be smart, and it really kind of forced me out of medicine, after my surgeries. And I decided this is something that I can sit in a chair and do for the rest of my life. I just have to learn it and study, and that's what I've done. So
and perhaps on occasion experience a different kind of pain.
Right, absolutely.
But hopefully those occasions are fewer as opposed to the gains and the profits that we're making. As a doctor, are there any qualities or skills that you found are helping you be successful in this role?
Sure. I think that probably one of the reasons that I've been drawn to, trading especially, and again, I don't only trade, I also invest for the long run, both in the stock market and real estate. But one of the things that appeals to me in trading is it's very similar to sports, and it's also very similar to emergency medicine. In emergency medicine, you have a critical patient that comes in, and if the case goes well, that's easy. But if the case goes in the wrong direction, you need to have your plan A, B, C, D, E, and F, right? Mm-hmm. And so that was one of the things we learned in emergency medicine residency, and we spent hours, 60, 70 hours a week learning this over and over again for years, putting ourselves into very difficult, challenging positions that really forced us to slow down, take a deep breath, think logically, think rationally. And I do think that training has translated now over to the stock market.
All right, so let's focus on the stock market. And
Sure.
When you're looking at equities, what are the criteria that you look at before deciding, that you're going to start exploring the trades in a particular stock?
Right. So on a day-to-day basis, we look for stocks that have gone up significantly, say 5, 10, 20%, or stocks that have fallen significantly. So we're looking for extreme overbought or oversold conditions. And then really, similarly, if for the long run, I'm also looking for big pullbacks in the market, 15, 20, 30% pullbacks, looking for buying opportunities, looking to inch in and dollar cost average into the S&P 500, for example, and then also, accumulating shares of good companies that have solid fundamentals for the long run. So
okay, but let's focus on the short-term trading, and that's where you deploy your 1-minute chart technique.
Right.
And that's what you teach people to do in the course. So break that down for us. Give me an example of a trade that you made using these 1-minute charts, what a 1-minute chart is.
Okay.
And let's dissect.
We can dissect it. Yeah, I actually have a new course coming up here. It's called the 1-Minute Scalpel, Precision Profits. And so this, for example, is NVIDIA's chart. This is the 1-minute chart. A lot of these trend lines here are from the daily chart where I zoomed out, found these trend lines. And you can see here that there was this downsloping trend line. The price was respecting this. And as soon as it hit this area, we had a nice bounce. And I'll show you a couple examples of what I mean by that. So, for example, we would find this pattern called a falling wedge here.
And the candles are representing trades done in 60 seconds, in a minute.
Right. Each candle is 1 minute.
Okay.
So this candle, for example, opened here, closed here. This candle opened here and closed there. And so we would look to enter a trade right in this area, and then we would look to exit somewhere where there's resistance. So you see these pivot highs here, and this is a quick, say, 1 to 2% move on Warner Brothers stock in just 10, 15 minutes. So it's powerful, and as things add up over time, it can really accumulate nicely.
And the pattern that you're looking for is that wedge, that V, is that signaling to you that this is a good entry point? Yeah,
this is one of my favorite chart patterns to trade, the wedge patterns, the falling wedge or the rising wedge, but there's other patterns too. I found that this is the most dramatic and most predictable pattern, that I found in my daily trading. You can see here the S&P reacts the same way. It has this falling wedge pattern. The RSI is oversold. There's also some bullish divergence here. And then we tend to take profits up here when the RSI is around 70. And here's a chart which really portrays how many opportunities there are even within the first two hours of the trading day. This was pre-market on Coinbase, and you can see that...
This is the Coinbase stock.
This is the Coinbase stock on the 1-minute chart here, right? Coinbase is traded on the NASDAQ. And pre-market, we were forming this wedge. Here's support, and we bounced significantly, right? So we would enter in here. We would sell once the RSI got overbought. And again, here's another falling wedge. Here's another opportunity there. This is a falling channel, also bouncing off support. Same process repeats over and over again in the stock market on every stock.
What's the difference between that entry point and that sell point in terms of either percentage or dollar value?
Sure. So just this move here is 2%. So I would imagine this is about 3%.
So what's the dollar value of coming in and selling after the stock rises like 3%?
So
I guess it depends on how much money you put in.
Sure,
right?
Well, exactly.
But per share, for example.
Right. Like let's say we bought $10,000 of this stock right here, and we held it until it rose 3%. It would be a $300 gain. Now, if we put $100,000 in, that would be a $3,000 gain in just about 20 minutes. So it can create some very dynamic opportunities in the market.
So these are very, very short-term positions.
They are.
The time difference between when you got in and when you got out is what?
Time difference, so this was about 9:20, right before the market opened here at 9:30, and this is about 9:45.
All right, so like in about 15 minutes, obviously depending on how much money you put in,
sure,
you're able to make between 3,000 to 30,000, depending on how big you go in with a bet, but 3% in 15 minutes.
Right, and look, I would say that you don't start by putting $100,000 into a trade. You start by putting say $100 into a trade, and you practice this, and over time you inch up to 5,000, 10,000, 50,000, and once you know what you're doing, the opportunities are there.
And so you making money with these small trades, well, I mean, I guess it depends on how much you put in, but trades that add up during the day. This is a very intense and focused trading technique, though.
It is.
Right, you've got to be really laser focused, looking for these patterns, looking for the moves.
It is, and I think that I'm drawn to this because emergency medicine really required that focus. You have 10 to 15 patients in your ER, and you have one with a heart attack, stroke, sepsis, brain bleed, respiratory distress, and so if you take your focus off for just 1 minute, you can miss something. And
what about those people that are not trained as ER doctors? I mean, can people be successful with this if they don't have that level of hyper focus and hyper concentration?
Absolutely. I think it takes training. It takes focus. It takes concerted effort over months and years, and you can do it. You can do it. Yep.
How many times does the pattern not work out?
I would say it depends on the market conditions. I would say it probably has a 20% failure rate. So just knowing that can put your stop losses tight and prevent any downturns.
But when you start to see the pattern form, I mean, does it ever not bounce up as you expect? Saying there's a 20% chance of it making that wedge,
sure,
but then not bouncing up.
Sure. Actually, I can probably show you a trade here that didn't work out. For example, this trade here. Let's say we were to enter right in here, right? The trade, the stock did move up. This is on Charter Communications on the 1 minute. Stock did move up, but it didn't come up to this resistance area.
Okay.
And let's say we were to add here, and we were to add here, so our average would be somewhere in this area. But look at what happened if we were looking for a move higher than this resistance, for example. It didn't quite get to our target point, and it broke down further, and here would be your stop out. So that's how you protect your capital.
And in terms of the criteria to determine your resistance and support levels, what are you using for that?
I'm using pivot highs, pivot lows, moving averages, gap fills. A lot of things that Gareth has taught me, and a lot of things that I learned actually before coming to Verified Investing as well.
But you go through all of that in your course, how to determine the resistance lines and support levels.
Absolutely.
To get the wedge patterns off. Okay, so you said when you're looking at a stock, you're looking at fundamentals, you're looking at dramatic price moves as well to decide whether you want to go in with this 1 minute scalpel approach. How does the macro picture fit into this? Do you take a look at that as well? Sure.
I think in general, so there's day trading, there's swing trading, and then there's long-term investing. And so day trading, really, you're looking for just these extreme moves intraday, and you're looking to profit from these types of patterns. Swing trading, in general, you're looking to find equities or commodities that are very high while the market's high, and you're looking for a pullback. You're looking to short stocks like for example Nvidia that are overdone while the markets that are all-time highs. If the markets are in the descending or in a big decline,
I don't know that shorting Nvidia has worked out so well for people. So I don't know about that particular example.
Yeah, that's been a black.
Nvidia's been defying expectations, but the fundamentals have proven that it's there with their latest earnings report.
Great revenue, great earnings. Absolutely, I think that it's been a unicorn. For sure. Most of the semiconductor industry has. But at some point,
back to the macro outlook of how much that plays into what you're looking at when you're selecting which positions to deploy.
Right. So in general, if the market's low, we're looking for swing longs on stocks. If the market's high and overdone, we're looking for swing shorts on stocks. And then, going back to long-term investing, if we have a 20-30% dip in the markets, you're looking to buy long-term the S&P and equities.
So let's get your assessment of the health of the U.S. economy. You want to get your macro outlook.
Sure.
We did hear from Fed Chair Jerome Powell today. Of course, everybody's watching intently to see what's going to happen with rate cuts. He said that the Fed is not ready to cut rates yet. He did focus that they're still watching inflation risks very carefully. I'm quoting him here: in considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. They do not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. Fed speak for, we're looking at the inflation data and we're not making any rate cuts yet. But he did say in this congressional hearing that he had on Capitol Hill that he does think the economy will achieve a soft landing. What are your thoughts, Dr. B?
Look, I'd like to root for Jerome Powell, and he very well may, achieve a soft landing. I think that the Federal Reserve, probably underestimated inflation. I think they were expecting a rate cut by the end of 2023. That didn't happen. And now we're looking into 2024. The market expected about 6 rate cuts. And now they've kind of tempered expectations down to about 3 rate cuts. And I've read some articles that some experts are considering no rate cuts in 2024 because inflation does still persist above that 2% target that the Fed, is so focused on getting to. Inflation has come down from the highs in 2021 and 2022 from 8 or 9%. Now it's hovering right around 3%. But, Gareth has mentioned, look, the last 1% from 3 to 2% can be very difficult. It's that last leg of the race. And I think that the wage growth has been strong, employment has been strong, and that's good. We don't want to see people losing their jobs. But right now, I guess we'll have to see how that plays out with the Fed and when they can cut rates and if they're able to achieve this soft landing versus a recession.
When you look at the fundamentals of the economy, is there anything there to indicate to you that the patient is not as healthy as it appears?
That's a great way to put it. I think that if you look at personal savings, for example, the personal savings spiked during COVID because of all of the stimulus.
Yeah.
There was pent-up demand. People weren't able to leave their house. And when they were let out, into the world again, people started to buy cars, buy homes, travel. And so if you look at a graph, personal savings actually declined during that time, and credit card debt spiked to all-time highs, now over $1 trillion. So there are some cracks emerging within the economy. I'd love to see a soft landing, but if you look back at history, typically when the Federal Reserve tries to achieve a soft landing, it's usually more difficult than they expect.
Yeah, it hasn't really been achieved. And of course, you've also got to keep in mind, as many economists are saying, the lagging effects of these rate hikes. I mean, it takes about 24 to 26 months for them to really filter through to the economy. I mean, you mentioned that it's a year ago when you made that trade on First Republic Bank, and it's a year since we saw the crisis in the banking sector.
Sure.
What's your outlook on the health of the banking sector as it is right now? Especially when we look at the commercial real estate situation, which many have been flagging.
Good point.
As I'm trying to think of a good metaphor to stick with the medical theme, but as a big ailment, I suppose, as a broken bone in the economy.
Sure. So if you look back at the Federal Reserve support and really the government support that came in 2023 in March 2023, the government basically created this lending program that propped up the banks. And so although we're in this quantitative tightening phase, that was kind of a pseudo quantitative easing phase and pumped liquidity into the markets and basically gave Americans more confidence that banks wouldn't, there wouldn't be a mass failure of banks. We did see a couple fail last year, but I do think that the other issue is as rates have gone higher, banks have had some unrealized losses in their bond portfolios.
Yeah.
So as rates go higher, so the value of their bond portfolio goes down.
Are you looking at any banking stocks right now that you think you could see shorting potential in?
I'm not so much looking to short banks right now.
Within your 1 minute chart. So nothing in the banking sector that's jumping out at you right now as a position possibility.
Not so much. If I do see like New York Community Bank was down over 40% today. And I was actually looking at that chart to see if there was a similar opportunity like we saw on First Republic. But honestly, it's trading below $2 now. There was a large halt on the stock, and I think they just raised about $1 billion in funding. So they are having some significant issues. And just so you know, buying the troubled banks is risky. You can have the stock can halt, and then they can go bankrupt or be taken over, and you can lose some of your equity there.
Purchased by J.P. Morgan,
right.
JP Diamond to the rescue,
right.
as we saw last year. So you never know on that. But then, which equities are you looking at right now, and thinking that there is opportunity to short, that they're undervalued, that you can deploy the 1 minute chart technique to?
So, in terms of the 1 minute, that's mostly intraday for me.
Yeah,
but
for sure.
From a swing trading perspective, I would look to swing trade NVIDIA and also SMCI or AVGO. I can pull up a couple of these charts.
Yeah, let's break them down.
So you have NVIDIA here, close to all-time highs. And you can see here, the RSI tells you that this is overbought. Now, this price can continue higher even though we are in overbought territory. But in general, when you look at a stock like this, any stock over the last 100, 200 years, most of the time, gravity will come in and reality will set in and the stock will fall. Same thing on AVGO. This is another semiconductor company. This stock was trading at $160 at the COVID lows and is now trading almost 10 times that. Mm-hmm. And you can see here there's this rising parallel channel, which is actually a bearish parallel. So, shorting up in this area would likely be beneficial. So, yeah, that's what I'm looking at.
You're looking at shorting NVIDIA?
Well, I'm not particularly shorting NVIDIA myself, just because of the run. I was shorting it end of 2023, and I was lucky enough to exit that position. But I'm just waiting. I'm looking at the S&P 500, for example. If we look at this chart,
okay, yeah.
For the first time since 1971, we've been up 16 weeks out of the last 18. That's an impressive statistic. Mm-hmm. And really, I'm looking at this large parallel channel, which is bearish, and also this major trend line. This was the dot-com boom, okay, the height of the dot-com boom. This was the height of 2021. And then this trend line is coming right into the current price right in here. And if you look at, this is the weekly chart, this is what's called a rising wedge. It works the same way that a falling wedge works. Falling wedges tend to break to the upside.
Right. Rising
wedges tend to break to the downside. So there's a lot of factors here that the S&P is overdone. It's up about 25% since November, and I think there's a lot of headwinds here for the market.
So you are anticipating a pullback in the S&P?
I am.
Over what period of time?
Probably over the next several months.
Several months, meaning 4 months, 6 months?
I'd say 1 to 3 months.
1 to 3 months, you're anticipating a pullback.
And this is why. Because if you look at this wedge pattern, there's only so much room. It's running out of room. So it has to make a decision, if you will. It has to either break up above or break down below. So that's really why I'm predicting in the short term, and it could be next week. Could be next week.
How much of a pullback percentage-wise do you think we have in the S&P?
Yeah, so if you were to pull a Fibonacci level, for example, let's say this were the top. The Fibonacci 50% retrace would be right around, 43.50 on the S&P. So that would be about 16% pullback. That's what I'm looking for.
Okay, so a 16% pullback in the S&P 500 by the next 3 months.
Right, and again, I'm not predicting. I'm just using the charts to help me look at the probabilities. The probabilities are that the market will fall.
Well, what's the probability? Like What, in terms of percentages, like a 50% probability? How confident are you that the charts are forecasting?
Sure. Just based on this rising wedge technique,
Yeah.
it's about a 68 to 70% chance that this will break to the downside. And again, this works the same way on every time frame, the weekly, the daily, the hourly chart, and the 1 minute chart.
Okay, so 15% pullback in the S&P 500, 70% chance of that happening over the next 3 months.
Based on the charts, yes.
Based on the charts. And you are teaching people how to read the charts in your course. In terms of, these are like shorter term moves, right? Are there any long-term positions that you're comfortable with, that the charts indicate a longer term sort of buy and hold outlook?
Sure, I do like Zoom, for example. This is something that many of us use on a daily basis. Zoom is a great platform. I think Tesla even added it to their cars. You can actually take a Zoom call from Tesla. We use it on a lot of our meetings. And sure, there are some competition, but I do believe that this is quite beaten down compared to where it should be. It's got strong revenue, strong earnings, relatively strong demand. This was the COVID boom, and so this makes sense that there was a lot of interest there. But I do believe Zoom has a good shot for higher prices.
Okay, I know you focus on equities, but do you care to weigh in on Bitcoin or gold?
Sure, yeah. I don't look so much at gold, but for example, Bitcoin, I do.
Seeing as we've had this new all-time high that we reached earlier this week with Bitcoin.
Geez, incredible week, yeah.
Gold, yeah.
Right. So as you can see here on Bitcoin, as many of you know, it hit essentially a double top or kissed the all-time high and then started to pull back. I think that if you look, again, just using RSI, it's overbought right now. It's an overbought territory. If you're looking to get into Bitcoin, the time was really down here at the end of 2022. The goal is really to understand market cycles, right? You have accumulation down here in this area, you have the markup phase, and then you have distribution typically when the RSI is higher, and then you have the markdown phase. So anytime I enter a position, I'm always thinking about what phase of the market cycle we're in.
And what does it tell you with Bitcoin then?
It tells me we're much closer to the distribution phase or the top than we are to the bottom.
Meaning you think we're not going to pass that 69,324 anytime soon? You think the pullback is more likely than a bursting through the
I think at least a short-term pullback is more likely. Long-term, I'm very bullish on Bitcoin. I do think that all of the different factors make for a very solid asset in the long run.
So Bitcoin is super interesting because it's a very emotional trade, right? It's the FOMO trade for a lot of people.
Right.
As soon as it starts to move and it starts to get mainstream news headlines, people feel like they want to jump in. The spot Bitcoin ETFs making it a lot easier for retail investors to jump in. I'm curious from a physician's perspective, right? Do you have any insight into how our neurochemical responses factor into markets with regards to fear and greed and anxiety? Is there an insight that you think you bring to the table that comes from a medical perspective that's perhaps different?
Sure. So I actually have a show. It's called The Market Pulse, and I had Jim Wyckoff on that show, and we talked about the market cycles, and it's actually called the Wyckoff market cycle.
But not after our Jim Wyckoff.
Not after Jim, even though it has his namesake. Yeah. But we discussed that, and if you look at what happens in the brain and the stress, the fight or flight response, and the stress center, you have all of these hormones. Like, let's say you're in a 1 minute trade, right, on the 1 minute charts, and it's moving very fast, and you're getting stressed. Usually, if you can't figure out how to control your emotions, you'll make the wrong decision. So just knowing that helps me, helps myself when I'm investing, and also here at Verified Investing when we're training people about technical analysis and about trading. It's just helpful for me to have that additional layer of knowledge.
To try and separate the emotions from the trading. And that's interesting because so much of these moves are sentiment driven. It's, we like to think that they're not. And even though a lot of these trades are done by algorithms and quants, there's still a lot of that human emotion still
100%.
Programming that. As we wrap up here, I'm curious, as a doctor, Dr. B, you've added so much value in the sense that you've saved lives. You've literally saved lives. And the big criticism against traders and Wall Street at large is that your guys aren't really doing anything. You're moving money around. You're not adding any value to society. Do you find that to be a challenge for you now, going from being, such a huge contributor to society at large as a doctor to someone that, as the accusation goes, is just moving money around, digital money around? Sure.
No, I totally understand that thought process, and I do miss my work. I miss seeing patients. I really do. I do some medical consulting on the side to kind of keep that medical side and medical brain. But in general, I think where I will add value, in this world, aside from helping my own finances improve and grow my wealth. I can help people not FOMO into these trades, right? Have the fear of missing out, buy at the top and sell low, and try to train people to, hey, buy lower and then sell higher. That's really the key is to managing their emotions and expectations and helping people in that way.
Okay, so help people achieve financial health.
There you go.
All right, this is your moment. Plug your course. Where can people learn more about it? When is it available?
Sure. So verifiedinvesting.com. It's going to be live on that website probably within the next week or two, maybe 3. Depends on when the website goes live. But I'm looking forward to it.
All right. Well, we'll see how it works out. Thank you so much. Always a pleasure chatting with you, and looking forward to seeing the course when it comes out.
Thank you so much, Michelle.
All right, Dr. B, thank you as always. And for me, Michelle Makori, the rest of the Kitco team, and the Verified Investing team, thank you for watching. We'll see you soon.